You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again. It is Wednesday, time for another episode of the Futures Rundown. Did you enjoy our sojourn into uranium last week? That was a wild one. Hopefully you enjoyed it. Hopefully you're having a good time checking out all of the great content on the network. Of course, if you want to go above and beyond, you want to get a couple additional programs, you want to get exclusives, you want to get live streams, you want to get your name in the hat for awesome giveaways and potentially win a pro trading crate, just like our pro member Eric Nelson did last episode. Only place to go to do that, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Futures Rundown this week, I am pleased to welcome back our old pal, Mr. Rich Excel. When he's not talking to us, he's busy teaching defense against the dark arts at the now Hogwarts for derivative students over there at the University of Illinois. Mr. Rich, welcome back to the show. How goes the battle against the dark arts, sir?
Thanks for having me, Mark. It's glad to be back. The battle is going very well. You know, we're trying to train the, you could use the Hogwarts analogy. You could also use the Terminator analogy, where we're trying to teach the next round of John Connors to take on the machines. I think that's another one that's apropos.
That also works.
I took a group of the students to Europe so we could expand the horizons of what other sorts of dark and mysterious things are going on.
Really?
From a European perspective and not just a U.S. perspective.
How do I get to become a part of the derivatives? None of my teachers ever took me to Europe. Rich, what am I missing?
I don't know. I tell you what, no one ever took me to Europe either. So I'm just trying to do the things that we couldn't have.
So don't be surprised if you see my name on the student roster next semester, sir. I could use a little sojourn to the derivatives hubs of Europe. Instead, listeners, we're going to have our own sojourn right on into the trading pits.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the Trading Pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what's lighting up our tape in the futures market this week. And we have a lot of movers and shakers to get to, Rich, but before we get there, what is catching your eye this week? What is lighting up your tape in the world of futures, sir?
Well, I'll tell you the first thing. I mean, I've been looking a little bit at the at ags for sure because of we had the acreage report come out June 30th. We've got WASDE coming out this week. Um, I wrote something I wrote this week. I was walking around, on the 4th of July holiday. As I walked around the lake, you see all the corn that's out there. The corn crop, at least in the in the eastern part of the corn belt, is looking very very robust. So it makes me want to look at corn, soybeans, those parts, and of course corn is a big driver of because it's a big feedstock into fuel, it's a big feedstock into proteins. It's a big use for with corn syrup, et cetera. It matters for consumers, and so that's what's really what I've been focused on a lot of late. But of course, there's a lot of other interesting things going on there on the upside and the downside.
I'm glad you mentioned the ags because, of course, what was it, about a month ago, we had those once in a lifetime dust storms rolling through Chicago. And it kind of got me wondering about the state of the topsoil downstate, if it's all blowing into the city. It didn't seem like things were looking too good down there. So I'm glad to hear that the crop is vibrant, listener. Let's see what's vibrant in the futures market this week, shall we? Let's kick things off to the green. Let's keep the party rolling here, listeners. We actually have an extended list. We have a couple, shall we say, similar contracts holding down some spots together. We'll kick it off at number 5. We'll combine Brent and WTI because they're kind of two halves of the same coin, and they're both moving about the same percentage, both about 4.9% this week. So they're both combining for the number 5 spot, listeners. Crude getting a bit of a lift this week. Number 4, we've got our old pal Sugar number 11, coming in up 5.41%. So that sugar that goes into your coffee getting a little bit pricier this week to keep our breakfast metaphor intact on the network here, listeners. Number 3, good old high-grade copper up 7.5%. They had one of their wildest days, I heard, since the late 90s? Some crazy time out there. Of course, these recent tariffs on copper driving a lot of action out there in that metal as a result. And so far, up about 7.5% for the week. And then number 2, we got another combo, listeners. This one will actually come maybe as music to the ears of some of our crypto bulls out there, because one of our long bemoaned, long troubled assets, ETH, coming into the upside this week. The ETH big and micro futures both tying for number 2 this week at about 10.8% to the upside respectively. So ETH has a long way to go to claw its way out of the hole, but at least it's not the number 1 worst performing asset on our list for the year so far. So that's something, I suppose. And a few more weeks like this, you might actually have something to talk about out there in ETH land. And then the number 1 upside mover going back to the realm of ags we were just talking about, it's OJ. OJ up 12.5%. OJ has been a dumpster fire for most of the year. So kind of like ETH, maybe that's our theme for the week, Rich. It's the losers, the dogs of the Dow, if you will, having their moment in the sun.
I think if you look at it across all asset classes, we are seeing a little bit of this, let's call it a broadening out of this risk rally. And so you are seeing things where there's been a dumpster fire really taking off. And I think orange juice probably falls in that category. But when you look at the rest of that list, Mark, I think you can't help but notice that there's probably a big political, maybe even a big beautiful bill impact on that list, because ETH, of course, is being driven, I think, a lot. And one of the things that's getting me pretty bullish here is the stablecoin legislation. And not only that, but it's the support for the stablecoin legislation coming from channels that people probably didn't think about, the Amazons and the Walmarts of the world, even from the Treasury Secretary. They would love to see stablecoins soak up all that Treasury demand and not have to rely on foreign investors. And so I think the legs of that stablecoin legislation have gotten a lot of people bullish on ETH, have gotten me bullish on ETH as well. It has been one that's been the head scratcher within crypto. It's got its problems too. It's got its detractors, but I think that's probably a positive catalyst that's driving it. Copper, you mentioned the tariffs. I mean, we've seen the massive spread widening between U.S. and COMEX and London copper on the tariff, news or not news or stories or headlines or whatever it is. And so that, again, another political influence. I think sugar, I look at that. I wondered to myself, don't follow it that closely, but I wondered to myself if that's not a little bit of an RFK influence because he's been pretty much against that corn syrup that I talked about before, and maybe sugar's a beneficiary there. And then crude oil, you can't, I don't think the risk personally, when I was looking at it a little bit this week, I'm not the risk premium, the geopolitical risk premium does not seem to be that high, frankly. But you have to respect the price action of crude, which is holding in there and grinding higher this week, even in the face of earlier this week, earlier this month, I should say, OPEC Plus coming out saying that they're actually going to start increasing supply. Not that that wasn't unexpected, but when you see positive price action in the face of news that should be bearish, I think you have to take note.
That is interesting. You're right. The hidden political hand driving all of this. I am surprised to hear you saying you're an ETH bull. I know you were a Solana guy for a long time, but you're right. There haven't been a lot of positive headlines for ETH in quite some time, but in the last couple of weeks, you're right. We're starting to see some coalescing, a big IPO kind of deals being turned into ETH holdings and things. So seems like maybe they're, for the first time in a while, maybe we're starting to see some signs of life in ETH, which we all know it could use some. So
I would just say, I mean, to me, I still like Solana better than ETH. Don't get me wrong, but I do think ETH has 60% market share of that kind of DeFi landscape. And as the big institutional players, the big corporate players come in, I think they're going to go with the biggest and not necessarily the best. And so I think ETH has maybe some support from that. Well, to be determined, but I think that's probably one of the things that's given it some support.
All right, listeners, let's keep rolling. To the downside we go. It can't be all sunshine and rainbows on the show unless you're short, in which case you're celebrating all of this. Number 5, again, we take this one with a bit of a grain of salt, listeners. It is an actively traded future, so we have to talk about it, but it is the VIX off nearly 4%, 3.92%. Again, the VIX, wait 5 minutes, it's going to be a very different number. So read into that one with a bit of a grain of salt. Number 4, to the downside this week, listeners, is our old pal hard red wheat coming in at about 3.97% to the downside there. Number 3, just talked about it last week, listeners. It's uranium. We had a whole episode about it. Uranium off 5.75%. We talked about the ways you can, or more realistically, can't really trade it. There are listed futures, but they don't really trade or have any volume. And some of the other ways you can get at it, looking at some of the ETFs that hold a variety of things, including the miners and other things like that. Some blockchain initiatives to try to offer uranium exposure. It's a wild marketplace. So if you're intrigued by uranium, you didn't check out that episode last week, check it out. Number 3, uranium off 5.75% this week. Number 2, it's our old pal nat gas, looking a little bit deflated this week, off 6.44%. And the big dog to the dark side, not a name we talk about that often on the show, it's canola oil, off 6.62%. Mr. Rich, kind of a weird smattering of names in our downside this week, sir. What's catching your eye?
Yeah, you're not going to see those 5 probably listed together too often. Maybe uranium and
maybe
nat
ever.
gas. Yeah, but other than that, you're probably not going to see it. Volatility has been the one that honestly, it's not just the VIX. It's volatility in pretty much every product. Is a bit of a head scratcher. I did a chart and overlay probably a week and a half ago where I looked at the geopolitical risk premium or geopolitical risk uncertainty, the economic policy uncertainty, and various measures of risk, the VIX, the Treasury VIX, things like that. And, if you look back through 25 years, they plot very, very well. When there's more uncertainty in the world, there tends to be more volatility in tradable assets, et cetera. If you look at it over the last 3 months, absolutely uncorrelated. We've got the highest levels of uncertainty this century, if not longer than that. And you wouldn't know it from the volatility markets because it's a complete yawner. And I imagine at this point, you've probably got a lot of dealers who are just sitting on long gamma in the summer saying, what's going on? I can't make back my theta. Why am I even in here? So that volatility one, I think, is the one that's super interesting to me because with all this uncertainty, maybe people are fading it, but that one I really don't understand. I will have to go back and listen to the uranium episode. I am a long-term bull on uranium, but I also appreciate that long-term in uranium probably means 10 years. It probably doesn't mean 10 weeks. And so you have to really be patient. But that's the one that there's a lot of passion on both sides of that. And then nat gas to me is probably the biggest surprise because seasonally we're usually in the summer months, people cranking on their air conditioners, et cetera, usually get a little bit of a bid to nat gas. But it just, that one just obviously big move to the downside. Hopefully people see that on their bills and it gets them through some of the other inflation they might be getting.
Let's look at the bill for what's coming due today in the futures market. Is it an active day? Is it an explosive day out there? We usually use that barometer, listeners, of around 300,000 contracts is a respectable day. Not earth-shaking, but respectable. We're not quite there today. As the start of the show, we were right around 250,000 contracts to break into the top 10. That got you to the 30-year, exactly 250,000 contracts. And once again, we are pretty much all SEP all the time, with the exception of two. Maybe you can guess which one of them is. Maybe the other one, maybe not. Number 9, coming out right above it, which is interesting, 30-day Fed funds. I don't see that squeezing into the top 10 too often. It's also the only August contract on our docket this week, so probably a little bit of reason for that. 253 on the tape for number 9, listeners. Number 8, the usual candidate to hang out in December all the time. It's 3-month SOFR. 301,000 contracts. So we got to get all the way up to number 8 to get to our barometer of 300,000 contracts, listeners. Number 7, listeners, we're going out to the Ultra 10-year. The Ultra 10-year. 334,000 contracts on the tape for number 7. Number 6, after all that rates fun, let's go to the land of the equities, the NASDAQ E-mini. 200. We'll try that again. 374,000. There we go. 374,000 contracts on the tape for the number 6 spot. Number 5, it's the 2-year note. 382,000 contracts. Number 4, right above it, it's the 5-year note. 757,000. So number 4, we're all the way up to 750,000. That is respectable. Number 3, going out to the micros, it's the S&P 500 micro. 825 on the tape. Again, take those micro numbers with a grain of salt. As we move on into number 2, the big boy E-mini, 872,000 contracts on the tape. And the big boy out there today, this is kind of wild. We're seeing it's the NASDAQ 100 micro topping our list today, 995,000 contracts. That's interesting to me. Rich, what are your thoughts on this list while I go check some of these numbers really quick?
Yeah, so the micro at the top of the board and the micros in general, I mean, retail obviously did a much better job on the stock market in the Liberation Day sell-off as it bought all the way down and then has held it going up, whereas institutions have been chasing their tail. So it's not surprising to me that they're sitting on some house money and you're seeing a little bit of trading. But I do note that there's a lot, I mean, there are always going to be a lot of fixed income type futures on this list. But to me, the fixed income market, always the anchor, always the kind of the bedrock that you have to use since you price every asset off of the fixed income curve. To me, it's super interesting right now because U.S. centric investors, we sit there and we look at the 10-year yields and we say, okay, we're 4.3, 4.4, somewhere in there. Things are fine, et cetera. You've got Treasury Secretary Besson trying to talk them down by saying he's not going to issue longer. He's going to issue short term because there's no reason why these rates should be so high. You've got clearly the president job owning the Fed. To try to get them to lower rates. You've got people jumping in line to get ahead of when Chairman Powell gets replaced and the market betting on when that might be. All those different things. You had the FOMC minutes come out today showing that the Fed governors are actually kind of split on inflation. Some of them think that it's actually still not contained. Others think that it's well contained. I think some of that is people who are trying to, again, position themselves maybe for the chairman spot. Others who are really kind of looking at the data and uncertainty around tariffs, saying we don't really know, and you saw that in the dot plots. But ultimately, the bond market is still suggesting that inflation's coming down and growth is slowing, and that's why there's still 2 rate cuts priced into December. There's enough out there that maybe suggests that we're because of the tariffs that have been announced and extended, as well as some other seasonal drivers, that inflation might tick back higher, which keeps the Fed on hold. So I think there's some trades in the Fed funds market and SOFR market. I think the auctions has people positioning around those. And I think the big thing to note that a lot of people don't think about, of course, I'm Mr. FX. I like to look at FX market. When you talk about the Treasury market, it really what matters to me is the FX hedge yield. And if I had to ask you what bond market, let's just pick the four big ones: the U.S., the U.K., Germany, and Japan. Which bond market looks the most attractive to global investors?
I was just pulling up some data while you were talking, Mr. Rich,
Yeah.
because speaking of the bonds, and I'll answer your question in a second, but what was bothering me is I thought something was missing from our list. It's usually number one at the top of our list, and that is our old friend, the 10-year note, Mr. Rich. It was somehow excised from our list this week. That is the number one offender for the week this week. Now the world seems more correct. The NASDAQ can't be at the top, and the 10-year nowhere to be found, Mr. Rich. That didn't make any sense to me. So yeah, we're talking almost 1.3 million contracts on the tape for the 10-year note, Mr. Rich. So there we go. All is right with the world. Now, I'm sorry. What was your question? I
was asking which bond market do you think for global investors is the most attractive? And I'll jump ahead of it, but actually the Japanese bond market is the most interesting for both European and U.S. investors, because once you go out into the FX market and hedge those coupons and hedge that principal back, you actually get yields in excess of 5% in the Japanese government bond market, which you can't find in the US and you can't find in Europe. And so the Japanese government bond market is actually, on an FX hedge basis, far more appealing. And the US bond market to Japanese investors is very, very unappealing, as it is to European investors, because now with the move that we've seen in the dollar this year, those investors no longer want to just hold long dollar exposure. They want to FX hedge. And once you do that, that 4.4% yield pretty much goes away. You chew up almost 3%, 2.5% to 3% on FX hedges. And so I think we're used to looking at the nominal yields and saying, oh, I think 10-year treasuries look pretty attractive at whatever yield it is. But once you start taking into account who's buying them and what types of things that they're looking at, you realize that maybe the 10-year yield needs to go a little bit higher. And what is that? What would drive that? Auctions and Fed movement or lack thereof, and what does that mean for other assets? And so, just a long-winded way of saying, I'm not surprised with all of the different moving parts in the bond market that it's one of the more, across the board, across the curve, if you will, one of the more active parts of the market.
How did I know you're going to get into FX? I may have hinted at that earlier. I said, we'll probably get into some FX later when Rich joins us on the show. But that's a good point, though. We've been bringing up a lot of the discrepancy between the ECB and the Fed here in terms of rate outlook and rate action and actual easing in the case of the ECB. We're talking about that a lot on our new show, the European Market Brief. But for obvious reasons, that show is called the European Market Brief. We don't get into the Japanese angle very often. So it's kind of fascinating when you add in the Japanese wrinkle, because a lot of people were thinking, which is more attractive right now, Europe versus US. But you add Japan into that mix, it's a little bit of a different story, which is kind of fascinating out there. Speaking of different stories, Mr. Rich, let's look how things are lining up for the year. Hard to believe we're already pretty much halfway through 2025. It seems like this year just started and we're already halfway through. So listeners, we have definite trends emerging in some of your favorite, maybe some of your least favorite assets as well. And maybe some trends that seem like they were shaping up, maybe they're starting to turn around. Hint, hint. We were talking about that earlier. Let's go to the upside again, shall we, listeners? First, we're going to kick things off again. We were just talking about this with Dan on Options Bootcamp. This has been a great year to be a metals head. I don't care if you're base. I don't care if you're precious. You're having a pretty good year across the board. It's a good year when gold's all the way down at number 5. It was our number 1 best performing asset for the year not too long ago. Still in the top 5, but just barely 22.25% for the number 5 spot. Number 4, keeping it in the shiny stuff, it is palladium, up 22.9%. Number 3, the lone ag sneaking in there, it's soybean oil, up 31% for the year. Number 2, back to the metals. This time we're going base. It's high-grade copper, up 33.1%. And then number 1, the big dog. Some people have accused this of being part of a squeeze. Either way, it's had a banger year, up 48.5%. It's platinum. So again, metals dominating our upside movers for the year. Mr. Rich, what are your thoughts?
I think you're absolutely right about being the metalhead. I think it's one of those where you're looking at it from the standpoint of, again, the politics angle, and gold is gold, right? People want to get are interested in that for the debasement ideas, et cetera, and the large debt. But when you're looking at things like palladium, magnesium, you're looking high grade copper, you're looking at the kind of raw industrials, import industry or import metals, things like that, and just saying, okay, we're maybe changing the global trade order here. What's going to be most affected? What do U.S. companies import a lot of, and that they're going to need in an uncertain tariff world? And I think that's what you're starting to see there. Soybean oil, I think, is one of those things where the ags have been under pressure, as we talked about, and farmers have been struggling. And of course, the Chinese buyer has really stepped out of the U.S. soybean market as Brazil is replacing, taking market share from U.S. farmers when it comes to soybean exports. But it's been that kind of the biodiesel, synthetic aviation fuel, the soybean oil market that's really stepped in and soaked up a lot of that excess supply of soybeans, so that the market has been adjusting pretty normally. And so that's really kind of a welcome relief, I think, for those farmers in the Midwest that might be struggling under the fact that they might not have fully hedged themselves ahead of the planting season this year.
Or maybe they're struggling with the fact that all their topsoil blew into my front of my studio about a month ago. Bit alarming when you look in your rearview mirror coming into the city, Rich, and you see a giant dust cloud like you're in the Sahara come bearing down on the city. Can't say I've ever seen that before or since. So
last time we had that was the Dust Bowl, right?
Yeah, probably a wee bit before all of our time. All right.
Last time we had tariffs like this was same period.
Coincidence? So. I think not, sir. There we go. All right. Tariffs equal Dust Bowl. There we go. We've just proven the correlation. All right. To the downside we go. Back to the land of the beans. This time soybean meal, listeners. Soybean meal coming in at number 5 on our biggest losers for the year, listeners. Off 13.7% for the year. Number 4, it's cocoa. So if you're looking to have a little hot cocoa or a little chocolate out there, 15.36%. It's looking a little cheaper this year so far. So that's a plus for you. Offsets some of your maybe coffee pain and other pain. Number 3, listeners, this is our old pal. So it's climbing the list of losers, which is a good thing. Maybe if you're an ETH bull, it'll eventually get off of it. It was at number 1 for quite some time, so that at least is a good thing. So number 3 is ETH only. I say only in air quotes, off 23.1% for the year now. You know, if you were listening to the show a month or two ago, it was off 40+% for the year. So a week like this, gaining 10%, you keep a few more of those, and maybe you dig your way slowly out of the trough that ETH has dug for itself this year. Number 2, the other EM, it's lithium, listeners, coming in number 2 for the year, off 28.21%. And our biggest loser for the year, we joked about it on the show a few times now, it is OJ. Your breakfast drink keeps getting cheaper, at least, off 44.3%. Rich, we were joking on the show not too long ago about what just a disaster of a market OJ is if you try to trade it. I know everyone cut their teeth watching FC OJ and trading places, and most people don't trade it. Have you ever traded OJ, sir?
I've never traded OJ. In fact, I've traded more butter contracts than I've traded OJ. So that tells you how little I've traded OJ. But in my gut, you're like, okay, it's being hurt by the tariff uncertainty, exports to Canada, Mexico. It's, Brazil's the biggest competitor out there, and they've been having bumper crop after bumper crop across the board. So it isn't really surprising to see it get crushed like this, but I haven't really traded to really know how the setup was.
All right, Mr. Rich, anything else lighting up your tape before we head on into the futures free-for-all, sir?
Yeah, well, the soybean meal is interesting. I mean, those that are interested, you got, we talked about oil and talked about the beans themselves. I'll look at the crush because it's probably my guess is there's a little bit of that where there's enough beans out there. The demand is coming from the oil side, and the meal is just kind of a leftover byproduct. And so that's just kind of getting dumped at any price to satisfy the meal or the oil demand. Cocoa, welcome relief to see that. I know there's still some problems in the Cote d'Ivoire, Ivory Coast. And so, interesting to see that's down a little bit. But Ether, again, it's been a dog for not just this year, but probably 12 months or so. But there might be a catalyst, and people still are pretty bearish. And so I think from a trading perspective, technically looking at it today, it looks like it's, at a level where we might be starting to see a little bit of support and maybe breaking out a little bit. Even you don't have to be a bull to kind of get interested about getting long on a trading perspective with the catalyst coming forward. So that's something I would take a look at.
All right, as we take a look at what you folks have on the brain, a little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, let's get out to the futures free-for-all. And our current question of the week, Rich, is one that is very germane to this program as we spend most of our time on this show talking about a wide variety of assets and how they stack up against each other. We said, you know what, we're coming into the second half of the year, which again is still kind of wild to say. And we said, second half of the year, which of these asset classes do you feel has the most potential upside? And we kept it pretty broad, pretty general, pretty basic. We didn't get wild. We didn't say lithium or any subcategory of any big category you're familiar with. We kept it top level. We said equities, then we said gold/metals, and then we said fixed income. And of course, we gave you the infamous other for a lot of you to do your write-ins. We've already had write-ins for energy, and we've had write-ins for small caps, which again, a subset of equities, but we'll allow it out there. So, Mr. Rich, what are your thoughts heading into the second half of the year? Are either of these three major asset classes intriguing you? Obviously, we didn't include crypto. We didn't include we did a lot of things we didn't include in this. So, is there some other asset class that intrigues you more? And then, which way you think our audience is going?
Good question. I mean, I crypto definitely is kind of up there. I'm interested in the in the kind of the metal space, especially not necessarily gold as much as the industrial metals, the base metals. I think those are going to be interesting, and the people maybe look to stockpile those ahead of any tariffs. I think that might be the place that I would go. Equities are going to certainly probably be up there, but I think they might lag because they've already had a hell of a recovery from where they are, and earnings expectations are a little bit higher than they probably should be. But I do like that kind of right in on small caps. I think, again, going back to politics being the catalyst, the deregulation of the mid cap, if the regional banks that they're talking about is going to provide a little bit more capital to small cap companies, I think that's probably a positive catalyst. And these small cap stocks have lagged massively, not just year to date or the last year, but the last 10 years for the most part. And so I think if you start to see small companies getting a little bit more optimistic, you could see scope for that. But again, it's a function of the economy holding in there, because they're going to be the tip of the spear. If the economy rolls over, they're in trouble. So, and I think fixed income is just going to. I think I'm pretty bearish fixed income. So in the U.S. at least. So I would definitely put it at the bottom. So I guess I would go gold, metals, equities, fixed income in that order. Though I do like the other probably is where I'm most centered.
Well, about 28.6% of our audience agree with your gold call. That is number 2 for our audience. Actually, number 1, straight exact 50% right now, going old school plain vanilla equities, Rich. They're like, hey, stocks keep going up. I want to ride that train for a little longer. 11.9% going for fixed income right now, and about 9.5% for other. And we've had a lot of fun others. That will be live throughout the rest of the week, listeners. So if you haven't voted yet, get over there, make your voice heard. If you have a fun write-in, feel free to share it with the rest of the class. But Rich, the thing I really wanted to get your viewpoint on, the subject that has been dividing our chat the entire time we've been talking. It was inspired by a little argument I had with our buddy Mr. Passarelli on the previous show, Options Bootcamp. And we were winding down the show. Things were going perfectly, and he had to somehow bring back this old debate of ketchup on a hot dog, Mr. Rich. And he thought because the Pope is from his neck of the woods, he thought it was finally time this new Chicago Pope can make it an actual sin to put ketchup on a hot dog. So that inspired a debate in our chat, all kinds of people on both sides. I took the other side of that. I was a little bit devil advocate just for fun. I said, you know what? Not all case meats are the same. I could see putting mustard on, Italian sausage or a bratwurst. That's certainly good. On a hot dog, different flavor profile. It's not the same kind of case meat. And I also said, hey, look at economics. Costco sells more hot dogs than anybody, and they put out a ton of ketchup for them. So they know what their audience wants. So I don't know. So at the end of the day, Mr. Rich, we put it out to our audience. They are the ultimate arbiters of all things. They've been voting while we've been talking here. Our chat's going all on about A1. Ketchup on a steak, I'm not down with that. I don't go ketchup on a steak. So who said that? The Queen. You should be ashamed of yourself, Queen. I'm just kidding. But our actual question, the ketchup, who knew how controversial ketchup could be, Rich? But our audience voting fast and furious right now. Mr. Rich, where do you fall on the seminal issue of the day? Ketchup on a hot dog, yes, it's delicious, or no, it's a sin, sir? And which way is our audience going?
I'm in the no, it's a sin camp. To me, I'm a Chicago dog fan, and of course, you would never put ketchup on a Chicago dog. Over the weekend, I had Coney dogs for the first time. That Detroit specialty, no ketchup on a Coney dog. So even the Detroit crowd would agree, even though it's made very different than the Chicago dog. So it's not just a Chicago thing. I'm sympathetic to your idea, though, that there might be place for ketchup in other cased meats.
Yes,
that's a fair point. Haven't heard that before. I wouldn't do it myself. I think it's Patrick Mahomes that puts the ketchup on a steak, right?
Yeah, I think you're
right. To me, I'm like, why wouldn't this time of year, especially, why wouldn't I just chop up tomatoes and put those on my, instead of mashing them with a whole bunch of other stuff into ketchup? So you won't find me picking ketchup for just about anything.
Someone put a vote in our chat for Chipotle ketchup. I'm down for that. That's pretty good too. A little spicy.
Chipotle sauce on anything would be good.
Chipotle ketchup is pretty good. So a lot of ways you can go with it. I'm just saying, don't just put all cased meats into the same bucket. Don't be a cased meatist.
Absolutely. Wait, how about Chardonnay? I mean, where's that?
Oh yeah, I'm down for all of that. I like a lot of good toppings. I'm just saying, don't limit me to no ketchup. I'll take a little ketchup. I'll put some relish. I'll put some onions. I'll put mustard too. I'll put some, Chipotle sounds pretty freaking good. Sriracha, also good on a hot dog. But we can have a whole show, Rich, just awesome cased meat toppings.
In some ways, I kind of fall into like the whole debate about pizza. Like, people like, do you like Chicago pizza or New York pizza or Detroit pizza? I'm like, I like all pizza. And you can't pick favorites there. So I'll eat it all. And I think when you talk about meats and all those toppings, like, I'll give it all a try. And I think it probably all tastes pretty good.
Well, our audience, they were heavily in favor of putting ketchup on a hot dog. Looks like some of your kind have come in as the show has started, Mr. Rich. Now they're still winning. Yes, it's delicious. It's still winning, but they're down to 62.5%, so below 2/3. Only 37.5% right now saying no, it's a sin. So still level-headed folks are prevailing. If you want to gum up the works, or if you want to agree with our audience, head over there at Options. We'll keep this live throughout the rest of the day so you too can play too on the important issues of the day. Mr. Rich, that music means we've come to the end of another episode of the Futures Rundown. I want to appreciate you taking some time out of taking those kids on some grand tours of Europe. I think we're all jealous. Really quickly, what were the hot spots? Where'd you go? What were the hot derivative tour spots of Europe?
Well, we went Frankfurt, Paris, Zurich, and Vienna.
Okay, so you got to do Frankfurt. No London.
Frankfurt, got to see Eurex. That's obviously a lot of big derivatives markets there at Frankfurt, kind of the heart of Europe. Paris was a little bit more focused on kind of, let's just say, OTC type of markets. That's kind of where the French are kind of known to stake their claim. Zurich. Talking to Zurich and talking to a lot of the wealth managers, the asset managers, and even the crypto crowd got me probably a lot more bullish on crypto. I've always been kind of bullish, but I'm seeing that I think was hearing a lot of that across the board, not just startup companies, but also asset managers and wealth managers have been around for a couple hundred years. There's definitely a bullishness coming from Switzerland. On crypto. So I think that's kind of interesting. And I think Vienna is kind of quietly one of the coolest cities of Europe that I don't hear a lot of people talking about.
So there you go, listeners. If you were on the fence about joining Rich's Hogwarts Academy, then if you sign up now, he will personally take you on a grand tour of Europe to all of the derivatives hotspot. How can you pass that? And you learn some defense against the dark arts at the same time. If folks want to check out what you have cooking over there, maybe they're intrigued, Rich, where should they go? What should they do?
Well, I mean, the best place is you could follow me on LinkedIn. Just kind of connect with me on LinkedIn. On X, you could follow me there at Excel Richard. I'm writing for the CME on a bi-weekly basis. So Excel with Options, you go to CME Group to kind of find that, or my Substack, which is called Stay Vigilant on Substack, where I write on a weekly basis. And so catch up on a lot of different topics, from a lot of it from a top-down perspective.
Catch up on a lot of topics and put some ketchup on your hot dogs as you read all of Rich's great work over there. That's going to do it for us on the Futures Rundown. Also going to do it for us on the network today. Back again tomorrow with our usual doubleheader of the option block and This Week in Futures Options. Friday, back to talk some vol with vol views. And then, of course, one final time for our pro friends. We're getting odd with options oddities. Should be a fun one. And then back again next week all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.